Every hidden advantage of owning physical gold. Explained. There's a metal that has survived every empire collapse, every currency failure, every financial crisis in human history. And right now, in 2026, as the dollar loses purchasing power, as debt spirals to 39 trillion, as geopolitical tensions escalate, the people who understand what's coming are quietly accumulating it. Not in ETFs, not in certificates, not in promises. In physical metal they can hold in their hands. This isn't about investment returns. This isn't about beating the stock market. This is about the hidden advantages of owning physical gold that nobody explains, because the financial system profits when you don't understand them. Because when you own physical gold, you own something that exists outside the banking system, outside government control, outside the mechanisms that have destroyed currencies and confiscated wealth for centuries. And once you understand why that matters, why physical ownership is fundamentally different from paper gold, you'll see why central banks are buying physical gold at the fastest rate in 50 years, while telling you to invest in stocks and bonds. Let me show you the hidden advantages they don't want you to know about, why physical gold has protected wealth through every crisis, and why the distinction between owning metal versus owning a promise might be the most important financial decision you'll make in the next 5 years. Before we get into the specific advantages, you need to understand what physical gold actually is, and why it's different from every other asset. Gold is an element. Atomic number 79. It cannot be created, cannot be printed, cannot be digitized. Every ounce that exists was either mined from the earth or has been recycled from existing gold. The total amount of gold ever mined in human history is about 212,000 tons. That's it. That's all the gold that exists. If you melted every ounce ever mined, it would fit in a cube 72 feet on each side, about 3.5 Olympic swimming pools. The entire global gold supply would fit in a space smaller than a baseball diamond. This scarcity is absolute. Unlike dollars, which the Federal Reserve can create infinitely, unlike stocks, which companies can dilute by issuing more shares, unlike real estate, where they can always build more property, gold supply grows at about 1.5% per year from mining. That's it. No central bank can print it. No government can decree it into existence. No corporation can issue more to raise capital. This is the first hidden advantage. Absolute scarcity. When you own physical gold, you own something that cannot be inflated away. And this matters more than most people understand, because every fiat currency in history, every single one, has eventually gone to zero. The Roman denarius, debased over centuries. The Spanish real, destroyed by New World silver. The French assignat, printed into hyperinflation during the Revolution. The German paper mark, wheelbarrows of cash to buy bread in 1923. The Soviet ruble, worthless by 1991. Not some currencies, all currencies. The average lifespan of a fiat currency is 27 years. The dollar has been pure fiat since 1971. We're 54 years in. We're on borrowed time. But gold? Gold has been money for 5,000 years. It was money when the pyramids were built. It was money when Rome fell. It was money when Columbus discovered America. It's money today, not because governments say so, because humans recognize its properties: durable, divisible, portable, fungible, and scarce. These properties don't change. Governments change. Currencies change. Gold remains. This is why central banks hold gold. Not dollars, not euros, not bonds, gold. Physical metal in vaults, because they know what we're supposed to forget. When the system collapses, gold survives. Now, let's get into the specific hidden advantages, the things nobody explains when they're trying to sell you paper gold or keep you invested in the system. Hidden advantage number 1, counterparty risk elimination. This is the most critical distinction between physical gold and every other financial asset. When you own physical gold, you own an asset with no counterparty risk. That means you don't need anyone else to make good on a promise for your gold to have value. Think about every other asset you own. Stocks, you're dependent on the company performing, on management executing, on the market functioning. If the company goes bankrupt, your shares become worthless. Bonds, you're dependent on the borrower repaying. If they default, you lose. Bank deposits, you're dependent on the bank's solvency. If the bank fails, your deposits are at risk. Even with FDIC insurance, you're dependent on the government making good on that promise. Real estate, you're dependent on property rights being enforced, on local government not seizing it, on being able to sell it when you need to. Every traditional asset has counterparty risk. Someone else has to perform for you to realize value. Physical gold has none of this. When you hold a gold coin or bar, its value doesn't depend on any institution, any government, any company, any promise. It's an asset that derives value from its physical properties and 5,000 years of human recognition. If every bank fails, gold still has value. If every government collapses, gold still has value. If the stock market goes to zero, gold still has value. This is why the super wealthy, The old money families, the people who've preserved wealth across generations, they hold physical gold, not as an investment, as insurance against systemic failure. Hidden advantage number 2, true ownership outside the system. When you own physical gold stored outside the banking system, you own something that doesn't appear on any ledger, controlled by institutions that can freeze, seize, or restrict your access. This is more valuable than most people realize. Your bank account, the bank can freeze it with a phone call. Happened in Cyprus in 2013. Depositors woke up to find their accounts frozen, then had 47.5% of deposits, over 100,000 euros confiscated. No warning, no vote, just gone. Your brokerage account, they can restrict trading, prevent withdrawals, liquidate positions. Happened to Robinhood users during the GameStop squeeze in 2021. Happened to Interactive Brokers customers. The assets were there, but customers couldn't access them. Your property, the government can seize it through eminent domain, tax it annually, regulate what you can do with it. You never truly own it. You rent it from the state, but physical gold held in your possession or in a private vault you control directly, that exists outside these systems. It's not in a database. It's not connected to your identity in a way that makes it easily confiscated. It's just metal. And metal doesn't require permission to own, permission to hold, permission to trade. This is why during the Great Depression, FDR signed Executive Order 6102, making private gold ownership illegal. The government demanded citizens turn in their gold in exchange for $20.67 per ounce, then immediately revalued gold to $35 per ounce. Instant 69% wealth confiscation from everyone who complied. But here's what happened. The people who understood the hidden advantages didn't comply. They kept their gold. They hid it. They moved it offshore. And when gold ownership became legal again in 1974, they still had their wealth. The compliant citizens who trusted the system got robbed. The ones who understood that physical possession equals ownership survived. This pattern repeats throughout history. In 1933, America. In 1966, Britain. In 1959, Australia. Governments ban gold, confiscate gold, restrict gold, because gold outside the system is wealth they cannot control. Hidden advantage, number 3, privacy and wealth protection. Physical gold offers financial privacy that doesn't exist anywhere else in the modern financial system. Every transaction you make electronically is tracked. Your bank knows where you spend. Credit card companies sell your purchase data. Brokerage firms report to the IRS. Property ownership is public record. Cryptocurrency transactions are on permanent public blockchains. Every aspect of modern finance is surveilled, tracked, reported. Physical gold held privately offers an alternative. When you buy gold coins or bars with cash from a private dealer, there's no record. When you store it personally or in a private vault with no reporting requirements, there's no database. When you sell it privately for cash, there's no transaction trail. I'm not advocating tax evasion. Report what you're legally required to report. But the distinction matters. Financial privacy isn't about hiding illegal activity. It's about keeping your wealth invisible to those who would take it. Think about who benefits from knowing what you own. Governments that want to tax it, lawyers who want to sue you, criminals who want to steal it, ex-spouses who want to claim it. The more visible your wealth, the more vulnerable you are. Physical gold, properly held, offers invisibility. Nobody knows you have it unless you tell them. And this matters more as wealth taxes, as unrealized capital gains taxes, as increasingly aggressive government revenue demands emerge. When the government can see your stock portfolio, your real estate holdings, your bank accounts, they can tax it. When they can't see it, they can't. This isn't about breaking laws. This is about using legal means to protect what you've earned from confiscatory policies that are coming. Because the pattern is clear. When governments get desperate for revenue, when debt becomes unsustainable, when crisis hits, they come for visible wealth. They raise taxes retroactively. They confiscate assets. They impose capital controls. And the people who kept everything in the system, everything visible, everything compliant, they get destroyed. The people who understood the value of privacy, who held physical gold outside the system, they survive. Hidden advantage number 4, portability and concentration of wealth. 1 ounce of gold, smaller than a shot glass, is worth about $2,700 right now. 1 kilogram bar, the size of a smartphone, is worth about $87,000. 100 ounces, fits in a shoebox, is worth $270,000. You can carry immense wealth in a small physical space. No other asset offers this combination of value density and portability. Real estate? Try carrying your house across a border. Stocks and bonds? They're electronic now, but accessing them requires the financial system functioning. Cash? $270,000 in $100 bills, weighs 6 pounds and fills a briefcase. Gold is denser than cash by a factor of 20. This portability matters in crisis scenarios that seem impossible until they happen. Jews fleeing Nazi Germany in the 1930s couldn't take their property, couldn't take their businesses, couldn't take their bank accounts. But the ones who converted wealth to gold and smuggled it out, they survived. Vietnamese refugees fleeing in 1975 couldn't take anything, but families that sewed gold into their clothing, that carried it hidden in their belongings, they had wealth when they reached safety. Venezuelans fleeing economic collapse right now can't take their bolivars, worthless, can't take their property, unsellable. But those who converted to gold before the collapse, who walked across the border to Colombia with their wealth in their pocket, they have options. This seems extreme. This seems like it couldn't happen here. But it's happened everywhere, throughout history, repeatedly. And the pattern says America isn't exempt. The pattern says when crisis comes, when war comes, when collapse comes, the people who can move their wealth survive. The people who can't, don't. Physical gold gives you that option. If you ever need to leave, if you ever need to move, if you ever need to start over, you can carry your wealth with you. Try doing that with a 401k or a mortgage. Hidden advantage, number 5. No maintenance, no degradation, eternal value. Gold doesn't rust, doesn't corrode, doesn't decay. A gold coin buried for 1,000 years comes out as pure as the day it was minted. This is a property no other physical asset shares. Real estate requires maintenance. Houses need repairs, roofs leak, properties deteriorate. If you don't spend money maintaining real estate, it loses value. Cars depreciate. Electronics become obsolete. Commodities rot or expire. Even art degrades over time without careful preservation. Gold sits there, forever, unchanged. This means holding gold has zero maintenance cost. No property taxes, no insurance requirements, no upkeep, no depreciation. You buy an ounce of gold today, put it in a safe, come back in 50 years. It's still an ounce of gold with the same purity, the same properties, the same value relative to goods and services. This is why gold is the ultimate store of value across time. You cannot store value in perishables. You cannot store value in things that decay. You can only store value in things that maintain their properties indefinitely. Gold is the only physical asset that does this while also being universally recognized and easily traded. And this matters for generational wealth transfer. You want to pass wealth to your children, to your grandchildren? Gold does this better than anything else. Your stocks might be worthless by then. The company might not exist. Your bonds might have defaulted. Your cash might have inflated to nothing. Your property might have been seized or taxed into oblivion. But gold passed down through generations maintains its purchasing power. An ounce of gold in 1920 bought a quality men's suit. An ounce of gold today buys a quality men's suit. The dollar price changed. The gold's purchasing power didn't. This is how old money preserves wealth, not through investments that require constant management. Through physical gold held across generations that maintains value regardless of which empire rises or falls. Hidden advantage number 6, crisis alpha and system insurance. Physical gold performs best exactly when everything else is failing. This inverse correlation to system stability is the hidden advantage that most financial advisors won't explain because it contradicts their entire business model. During the 2008 financial crisis, the stock market collapsed 57%, real estate crashed 30%, corporate bonds defaulted, banks failed. Gold went from $800 to $900 per ounce, up 137%. During the COVID panic in March 2020, stocks crashed 34% in 3 weeks. Gold held steady, then rallied to all-time highs above $2,000. During the 1970s stagflation, when stocks went nowhere for a decade and inflation destroyed purchasing power, gold went from $35 in 1971 to $850 in 1980. That's 2,300% return while everything else suffered. This isn't coincidence. Gold rises in crisis because it's the asset people flee to when confidence in the system breaks. When they realize their dollars might not hold value, their bonds might default, their stocks might collapse, they buy gold. And because physical gold supply is fixed, increased demand means higher prices. This is crisis alpha, making money when everything else is losing money. But more importantly, this is system insurance. You don't buy fire insurance hoping your house burns down. You buy it so if disaster strikes, you're protected. Physical gold is financial fire insurance. If the system works, if stocks go up, if bonds pay out, if the dollar holds, gold just sits there. You don't lose. You just don't gain. But if the system fails, if crisis hits, if currency collapses, physical gold explodes in value relative to everything else. And this is the hidden advantage. Gold's value isn't in maximizing returns during good times. It's in surviving bad times. The people who owned gold in Weimar Germany survived. The ones who didn't. The people who owned gold in Zimbabwe, in Venezuela, in Argentina, in Lebanon, they preserved purchasing power while everyone around them was destroyed. This is what physical gold does. It doesn't make you rich. It keeps you from becoming poor when the system fails. And given where we are in the debt cycle, given the money printing, given the instability, system insurance might be the most valuable asset class available. Hidden advantage number 7, liquidity without intermediaries. Physical gold is the most liquid asset that doesn't require the financial system to trade. You can sell gold coins to a dealer today and have cash in hand in 20 minutes. No broker needed, no clearinghouse required, no settlement time, no counterparty risk. Compare this to stocks. You sell stock, settlement takes 2 days, requires a functioning stock exchange, requires a functioning banking system to receive payment, requires your broker to be solvent. During crisis, these systems can freeze. Happened in 1929, happened in 2008, happened in Cyprus. When the system freezes, you can't access your wealth even though it's yours on paper. Real estate is even worse. Try selling a house quickly. Even in normal times, it takes months. In crisis, the market can completely freeze. 2008, houses couldn't be sold at any price. The market just stopped. Gold doesn't stop. Gold dealers always buy. Private parties always buy. Every coin shop, every bullion dealer, every pawn shop, they'll buy gold today at spot price minus a small premium. And during crisis, when people desperate for cash are selling everything, dealers pay even closer to spot. This liquidity matters because wealth you cannot access is worthless. And the time you most need to access wealth is during crisis. If the banking system freezes, if your brokerage restricts withdrawals, if property markets seize up, how do you get cash to survive? If you own physical gold, you walk to a dealer, you sell what you need, you have cash immediately. No permission required, no system required, just you and the buyer conducting a transaction that's been happening for 5,000 years. This liquidity without intermediaries is unique. And it's hidden because the financial industry doesn't want you thinking about scenarios where their systems don't function. They want you dependent on them. Physical gold makes you independent. Hidden advantage number 8, protection from digital control. We're moving towards central bank digital currencies, CBDCs, programmable money controlled by governments. The Federal Reserve is developing FedNow. China already has the digital yuan. Europe is building the digital euro. This isn't conspiracy theory. This is announced policy. And programmable money means control you cannot escape. With CBDCs, governments can program expiration dates on your money. They can restrict what you're allowed to buy. They can limit how much you can save. They can freeze your funds if you express wrong opinions, attend wrong protests, donate to wrong causes. Happened to Canadian truckers in 2022. Happened to protesters in China. Happened to dissidents in Russia. Digital money equals digital control. And once cash is eliminated, once everything is digital, that control is total. You cannot escape it. You cannot opt out. You use their system or you starve. Physical gold is the escape hatch. It's analog money. It cannot be programmed. It cannot be controlled. It cannot be frozen. It exists outside the digital panopticon they're building. And this matters more than most people realize because the system they're building isn't for your convenience. It's for your control. Every transaction tracked, every purchase approved or denied, every aspect of your economic life monitored and regulated, social credit scores, carbon allowances, approved merchants, restricted categories. This is coming. It's already here in China. It's being built in the West. And when it's fully implemented, the only money that exists outside their control is physical gold and silver. This is why central banks are buying physical gold at record rates while pushing CBDCs on citizens. They know what's coming. They're protecting themselves while putting you in a cage. If you understand what digital currency control means, if you understand what programmable money enables, physical gold isn't an investment decision. It's a freedom decision. Hidden advantage number 9, hedge against both inflation and deflation. Most assets only protect against one economic scenario. Stocks and real estate do well in inflation, but collapse in deflation. Bonds do well in deflation, but get destroyed in inflation. Cash loses purchasing power in inflation, but gains in deflation. Gold is the only asset that protects in both scenarios. In inflation, as currency loses purchasing power, gold rises to maintain its relative value. Happened in the 1970s. Happening now. Since 2000, gold is up 600%, while the dollar has lost 53% of its purchasing power. Gold didn't go up. Dollars went down. Gold just maintained its value measured in real goods. In deflation, as debt collapses and assets crash, gold maintains value because it has no counterparty risk. Happened in the 1930s, when stocks crashed 89%, when property crashed 50%, when deflation destroyed prices, gold held steady. It didn't rise in dollar terms because dollars were gaining purchasing power, but it maintained value against collapsing assets. This dual protection is the hidden advantage. You don't have to predict which scenario plays out. Gold protects you either way, because gold isn't betting on inflation or deflation. Gold is betting that whatever happens, governments will respond by destroying currency. And that's the surest bet in human history. In inflation, they print more to fight it, making it worse. In deflation, they print more to fight it, creating inflation. Either way, currency dies, gold survives. Hidden advantage number 10, the ultimate advantages nobody discusses. Physical gold cannot be hacked, cannot be frozen by executive order without physical confiscation, cannot be inflated, cannot be debased, cannot be diluted, cannot disappear in a bankruptcy, cannot be stolen electronically, cannot be seized in a divorce without physical possession, cannot be attached by creditors if properly held, cannot be claimed by banks in a bail-in, cannot be subject to negative interest rates, cannot be programmed, cannot be tracked if purchased privately, cannot be counterfeited easily, cannot be destroyed, cannot decay, cannot become obsolete. Every other asset has vulnerabilities. Physical gold properly held has none of these. This is why when you talk to people who've survived currency collapse, who've lived through hyperinflation, who've escaped authoritarian regimes, who've weathered financial crisis, they all say the same thing. I wish I'd bought more gold sooner, because they learned the hard way what the hidden advantages mean. They learned that paper promises fail, that systems collapse, that governments confiscate, that currencies die, and that the people who held physical gold outside the system were the only ones who preserved wealth through the chaos. Now let me address the objections, the arguments against physical gold that sound smart but miss the entire point. Objection 1, gold pays no yield. Correct. Gold sitting in a safe pays zero interest, zero dividends, generates a zero cash flow. And this is a feature, not a bug. Because yield requires counterparty risk. Someone has to pay you that interest. Someone has to maintain that dividend. Someone has to generate that cash flow. And when that someone fails, your yield disappears along with your principal. Gold has no yield because it has no risk. It just sits there, maintaining value, requiring nothing. In a world where banks pay 0.1% interest while inflation runs 7%, where bonds yield 3% while losing 4% to inflation, where dividend stocks collapse 50% in crisis, the lack of yield on gold is irrelevant. You're not losing yield. You're avoiding losses. Objection 2, gold is volatile. True. Gold dropped from $1,900 to $1,050 from 2011 to 2015. That's a 45% decline. But zoom out. Gold was $255 in 2001. It's $2,700 now. That's 959% gain over 24 years. The volatility is noise. The trend is preservation of purchasing power while currencies inflate. And the volatility matters less when you understand gold's purpose. You don't buy gold to trade it. You buy it to hold it, long term. Through cycles. The month-to-month price swings are irrelevant if your timeline is decades. Objection 3, you can't eat gold. This is the stupidest objection that somehow persists. You can't eat stocks either. You can't eat dollars. You can't eat bonds. In a complete civilizational collapse scenario where money has no value, you need food, water, ammunition, skills. Gold isn't for that scenario. Gold is for the scenario where civilization continues, but currencies fail, where you need to transact, need to preserve wealth, need to trade. And in that scenario, which is far more likely than complete collapse, gold works perfectly. It's worked for 5,000 years, through countless crises, less severe than total civilizational collapse. The "you can't eat it" objection is a distraction from people who don't understand what gold actually does. But here's what they really don't want you to know. The biggest hidden advantage of all. Physical gold is the only asset that completely exits the financial system while maintaining universal value. Every other asset ties you to the system. Stocks require functioning exchanges, bonds require functioning credit markets, bank deposits require functioning banks, real estate requires functioning property rights and government enforcement. Cryptocurrency requires functioning internet and power grid. Every single asset except physical gold requires the system to work. And when the system breaks, when crisis hits, when confidence fails, those assets either become worthless or inaccessible. Physical gold just sits there, still valuable, still tradable, still recognized. This is the ultimate insurance. This is what central banks understand. This is why they hold physical gold in vaults instead of paper certificates. This is why the super wealthy hold physical gold instead of gold ETFs, because they know the distinction between owning metal and owning a promise, and they know which one survives. So what do you do with this information? How do you actually benefit from these hidden advantages? First, understand that physical gold isn't an investment. It's insurance and wealth preservation. Don't buy gold expecting 20% annual returns. Buy gold expecting zero return over inflation, which means you're preserving purchasing power while everything else loses value. Second, the rule of thumb is 10 to 20% of investable assets in physical gold. Not gold ETFs, not gold mining stocks, not gold certificates. Physical metal you can hold. If you have $100,000 in investable assets, $10,000 to $20,000 should be physical gold. Third, buy recognizable forms. American Gold Eagles, Canadian Maple Leafs, South African Krugerrands. 1-ounce coins are most liquid. If you have more capital, 1 kilogram bars from recognized refineries. Avoid collectible coins, avoid numismatic premiums, avoid anything exotic. You want bullion. Metal valued by weight and purity, not by rarity or history. Fourth, storage matters. Small amounts, home safe. Larger amounts, private vault storage outside the banking system. Not a bank safe deposit box. Private vaults with segregated storage where you own specific bars or coins. Not pooled storage where you own a share of a pile. Fifth, buy incrementally. Dollar cost average. Don't wait for the perfect price. If gold is $2,700 today and you think it should be $2,500, buy half now and half if it drops. But don't wait for a crash to $2,000. It might not come. And if crisis hits before you bought, you've lost the opportunity. The people who understand these hidden advantages, who own physical gold outside the system, they're not hoping to get rich. They're ensuring they don't get poor. They're protecting against scenarios that seem impossible until they happen. And the pattern is clear. Currency collapse, government confiscation, financial crisis, war, system failure. These aren't ancient history. These are recurring patterns. Spain, Britain, Germany, Soviet Union, Argentina, Zimbabwe, Venezuela, Lebanon. Every generation thinks it can't happen to them. Every generation is wrong. The United States is following the same pattern. Printing money, accumulating debt, extending militarily beyond sustainable limits, hollowing out productive capacity. We're on stage 5 of 7 of imperial collapse. And when we hit stage 6 and 7, when currency fails and crisis hits, the people who own physical gold outside the system will preserve wealth. The people who trusted the system, who kept everything in paper, who believed dollars and stocks and bonds would always be safe, they'll learn the lesson every generation learns. The system fails, paper burns, promises break, but gold survives. If this showed you advantages of physical gold you'd never considered, if you understand now why the distinction between owning metal and owning paper matters, then you're starting to see how real wealth preservation works. They're not going to teach you this in financial planning courses. They're going to teach you to buy index funds and trust the system. But the people who've survived currency collapse, who've preserved wealth through crisis, who've escaped confiscation, they all did the same thing. They bought physical gold before they needed it, and they held it outside the system where it couldn't be seized, frozen, or inflated away. The hidden advantages aren't about getting rich. They're about staying free. And in the world that's coming, freedom might be worth more than gold. So here's my question for you. Do you own physical gold right now? And if not, what's stopping you? Is it the price, the storage concerns, or do you just not believe the system can fail? Drop your thoughts in the comments because I want to know where you stand on this. If this opened your eyes to why physical metal matters, hit the like button. Subscribe if you want to understand what actually preserves wealth when currencies fail. And click the video on your screen right now, 5 assets that survive. When the economy collapses, everything else fails because gold is just one piece. I'll show you the other 4 assets that make it through system collapse while everything else burns. The people who survive the next crisis are positioning now. Don't wait until everyone else figures it out.